We'll briefly give you a quick update on what we've been up to in terms of the four entities, and Matt will also talk to you about WAM Leaders, the recent IPO back in May, how we've deployed that capital, where we've deployed it and how it's all going, just to give you a brief update, and also talk to you about our view on the banks as well. But to look back, we had a good year last year. We're quite pleased with our performance. WAM Capital, the flagship fund, outperformed by just under 20%. We're very, very happy about that. We get a lot of questions about dividends. What's in the tank in terms of your dividend paying ability? For WAM Capital, we've got just under 25 cents a share in the profit reserve, so almost 2 years worth of dividend visibility. WAM Research, 37 cents a share, so that's in the best position out of the four, almost 4.5 years worth of dividend visibility. WAM Active, around 8 cents in the profit reserve, so just over a little over a year's worth. And WAM Leaders, 2.7 cents a share in the profit reserve. So we've got the ability to pay a dividend now for WAM Leaders. When we IPO'd, we'd said our intention was to pay the first dividend, albeit very, very small, at the interim result in February. So we've got the ability to do so now, and that's up to the board as to what they decide to do on the dividend front. In terms of the view on the market, look, we think it'll be pretty flat for the next 12 months. What we've been doing in the WAM Capital portfolio, at the end of July, we had 26% cash. Today, we're out to 42% cash. We've been selling out of a lot of our small to mid-cap industrial stocks that have performed quite well, that have reached our price targets, where the catalysts have played out. One that we've exited out of Smart Group in the last few months, which was a good investment for us over a few years. But certainly we are struggling to find value in that small cap industrial space at the moment. So don't look at our cash and say, oh, the guys are really negative on the market. It's just really we're struggling to find investment opportunities. We're actually rotating the portfolio at the moment more into the mid to large cap space for WAM Capital, WAM Research and WAM Active as we sit here today. In terms of stocks that we like, one is Ardent Leisure. We get a lot of questions about that. Clearly, thoughts are still with the families there, the 4 people that lost their life at Dreamworld only a few weeks ago. That was one of our top holdings into that particular event. We still quite like Ardent. The market cap has declined by around 300 million. They do own the land down there. We did buy Ardent for exposure to the main event business, which there's nothing that's changed in terms of the outlook for the main event business and where it could potentially go over the next 5 to 10 years. We do look at other theme parks around the world, how they've traded after events like this, and normally it takes around 2 years for them to recover to achieve a similar level of profitability, which we'll be watching quite closely at Dreamworld, particularly over the next few months. Hopefully we hear from the company in the coming weeks as to when the park will reopen. Another stock that we quite like at the moment, which we've been buying in the last 3 to 6 months, is Pinnacle. Pinnacle, I think, is the next Treasury Group when it was in its heyday. It basically seeds other fund managers. They're in Hyperion. Antipodes is, to me, the most attractive one that they own. They've got a 23% stake in Antipodes. You've got Platinum, you've got Magellan. I think that the Antipodes can be the third pillar in the international share space for advisors and financial planners in Australia. Jacob Mitchell, who runs Antipodes, was 2IC to Kid Nelson for many, many years, as you know, and he's recruited a lot of his ex-Platinum analysts across to join him at Antipodes to grow that particular business. So they've already grown their FUM to 2 billion. We think it'll go to 10 to 20 billion quite easily with the performance they've been able to generate in the very early stages in the first few years. So that's a stock that we like in the small cap end of the portfolio. I might now pass it over to Matt to give you an update on WAM Leaders. Thank you.
Thanks, Chris. WAM Leaders, we listed a 30th of May, raised just shy of $400 million. So it was a great result, and we thank everyone for their support. Over the next few months, post 30th of May, we deployed the cash, and we got fully invested around the second week of August. Fully invested for us is around that 20 to 30% cash. It's very rare for us to go under the 20%, just because, as Chris mentioned, it's based on the number of investment opportunities we can find at a particular point in time. Currently, we have 38 stocks in the portfolio, and we're running 20% cash. Like Chris said, there's a big rotation we saw in October, very big change from the small cap industrials, a big rotation out into banks, resources, and more the large cap names. And this has continued. You can see this by in October, the small ords was down 5.1, all ords was 2.1, and then banks and financials and resources are actually up for the month. A big rotation happening at the moment. So we're positioning the portfolio around that. One of the biggest changes we've had since doing the roadshow was our view on banks. We've become a lot more positive on banks. More so, a lot of the headwinds are turning actual to neutral events or potential tailwinds. The biggest one's around capital. Wayne Byers came out from APRA 2 Fridays ago and talked about capital and the implementation of Basel IV and the possible outcomes. It looks like capital will be a lot less than people think. Wayne Byers did say, though, Australian banks will need to hold more than the minimum, but I think probably the time frame has been pushed out as well with people's expectations. Everyone was thinking around March 17, but now it looks like there'll be a discussion around over 12 months, and then implementation will be in 2018. So it gives the banks a chance to grow their capital organically. Also, on the bad debt sides, it looks like a really stable environment, barring a shock event. Even 90-day delinquencies across most of the book has been decreasing, so the credit quality is actually really good at the moment. And then you've got interest rates. So you've had interest rates falling. A big negative for banks as deposits don't move and your interest rates on your loans go down. In an interest rate environment with them increasing, it's very positive for banks, and NIMs actually go up. So this headwind of NIMs going down for the past 7 years, you actually might get a turning point. So that's probably been the biggest change. Also, we've moved into financials such as QBE as well. About 8 to 10 weeks ago, we got into QBE. Again, it's just a play on US interest rates. And QBE also have a lot of capital. They have about 1.2 billion of excess capital over the PCA. So we think they're in a position where they actually can return capital to shareholders, which is a big change for QBE. I hate to say QBE looks good, because every time you say it looks good, it turns bad on you. But it finally looks like we'll get an okay result. Australia still, they had a bad half. So you're still going to have a little bit of a cycling bad result in Australia, but US crop has been a belter. So US crop is out of the ground, price was up and yields were up. So they're going to have a belter in the US crop. So quite positive on QBE and potentially around capital management. That's a big change. So that's probably an update on the WAM leaders at the moment.